I am standing here with Mr. Robert E. Wright, co-author of the book, Genealogy of American Finance. Mr. Wright, what inspired you to write this book?
Chuck Royce did, actually. He had the idea that a genealogy of the big financial firms needed to be done. No one else was doing it. It's not an easy task. And so he was really the inspiration. I guess the division of labor is so advanced these days, specialization, that I specialize in executing books rather than coming up with the ideas for them, which is unusual because normally in the past authors have come up with the idea and then executed. Yeah.
Based on your research, how did 50 finance corporations come to dominate the United States banking system?
Well, mostly through mergers, and mostly over the last few decades. Throughout most of U.S. history, the laws prevented banks from getting very large by preventing the number of branches that they could set up. But that began to change first with states loosening up their branching restrictions, and then, of course, in the 1990s, the federal government opened up the whole country essentially to branching across state lines. So there was a lot of merger activity, and banks that had been very small in a short period of time got to be quite sizable through those purchases.
Now, do you see these mergers and this transition or growth in our banking system good for the United States economy or bad?
It's both. It's always both. Some of the banks, as you might remember from 2008, got a little bit too big for their britches, a little bit too fast, got too complex really to manage effectively. But there are, a few score banks that I call Goldilocks banks. They're not too small. Some banks are too small. They can only, help out a certain segment of the community, and some are too big, and some are just right. So the two large ones, of course, have imposed some cost on us all that we're all aware of. But these Goldilocks banks have really helped particular states, cities, regions to thrive economically.
Do you think that these finance corporations have a major impact on the social, economical, and political growth of our country?
Certainly the economic. Social is harder to say, really. The politics part, of course, is troubling. Given changes in campaign finance laws because of Supreme Court decisions and whatnot, it may be that the largest banks again have too much influence on our political process, but not those Goldilocks banks that I mentioned earlier. They're, for lack of a better term, nice banks. They genuinely can care about their customers, and they're more relationship driven rather than transaction driven. So they might not make the maximum profit on a particular deal, but it's because they know that there will be more deals coming in the future, as opposed to some of the larger banks, which are all about the transaction.
And the money.
The money, yes. How much money can I earn from you right now on this particular transaction? So those Goldilocks banks are better governed and don't show much proclivity for trying to influence the the political system.
And do you think it was this influence that allowed the big banks to merge together? So now that we have 50 dominating the U.S.?
Well, there was certainly lobbying that was going on by the larger institutions that wanted to get even larger. On the other hand, we did need to allow our banks to get bigger.
Why is that?
Well, because small banks are inherently unstable. They can be shocked by changes in the overall economy, and that can make them fail, go bankrupt. So we had tens of thousands of banks going into the Great Depression and suffered horribly because many of them failed Well, right across the border to the north, Canada had only about 12 major banks at that time, and none of them failed during the Great Depression because they were all large enough to withstand the shock, and also their assets, their loans were much more diversified. So if you were a bank in Oklahoma, say, during the Dust Bowl, it was very hard for you to continue to exist because the farmers weren't able to repay their loans, and so we lost a lot of institution. Same thing happened again in the 1970s and 1980s during the savings and loan crisis. So we did need to allow some merger activity to to take place. Now, do we really need banks with trillions of dollars of assets as opposed to versus billions? Exactly. Yes, that's exactly right. That's an open question.
Okay, and I don't want to keep you too long, but I do have one final question for you. I want to know, based on your research, what do you see the future of the American finance system and the future of our dollar?
Wow. I wish I knew, because I would be right up the road there trading instead of here. We're at William and Wall, by the way, right down from the stock exchange. So that's very difficult to predict, especially because a lot of it's going to have to do with politics rather than the economy. And I don't know if you watch House of Cards, but politics is very difficult to forecast, to predict.
And out of curiosity, I couldn't resist. Have you heard of Bitcoin? And if so, what do you think about it?
Yes, I have. Sell.
Okay. And why?
Wow. It seems like just a new iteration of various past scams.
Interesting.
You throw a little computer in there, a little smoke and mirrors, and it looks like it's new, but not really.
And it'll bottom out just like everything else, and
that would be my prediction. Yeah.
Eventually. Well, it was wonderful speaking with you. It was a pleasure to meet you.
Same here.
Thank you for tuning in to The Legal Tender. This has been Mr. Robert E. Wright, co-author of the Genealogy of American Finance, and Mary Dean ESQ, the Wall Street Lawyer, on The Legal Tender at thewallstreetlawyer.com.